Hey there, YouTube. So in this video, I'm going to put out a trade idea or a potential trade idea, and the trade hasn't triggered yet. So I just want to point it out to everybody so everybody can watch it, and we're not going to get into the general stock market analysis too much. I'm going to cover gold and then this one trade idea. There's just not a lot that's changed in the general stock market right now. So let's start off with gold again. Like I said in the last video, gold is in a bull market. We were down near support. We're bouncing off, we've bounced off support and we continue to just run in this channel. So there's nothing that's changed from the bigger picture. Again, gold should be bought. Again, my opinion, but gold should be bought when it falls to support, and that's because the bigger picture, the larger time frame, the weekly, you could look at the monthly, but the weekly, the daily, is a bullish chart that shows it's in a bull market. So on the smaller time frames, the hourly, the daily, you can buy when we hit support, or you should. So that's gold bullion here. We're just kind of running within this channel. There's nothing that's really changed. I mean, we're just running in this channel. So when we break out to the upside of the channel or break down, then something will have changed. But for now, we're just going to continue in this channel. Gold, Barrick Gold here. Again, I added to the position the other day right down here at support. I've been adding to this position several times when we've hit support, and we've hit support a lot. I mean, this has been a very cleanly traded stock, and it's basically just making this bullish falling wedge, and every time it hits support, you can see we've hit it several times. We've just bounced off of that and just shot up to the upper end of resistance. I also marked out this other line here, this other trend line. We've had a couple reactions up there, and so I marked it out. And it's just, we've just kind of overshot the wedge, chopped around, and then fallen back down. We've done that. This is the third time now. So I figured I'd mark that out, and let's watch that. Let's consider this part of the wedge now because we've had three reactions. We'll consider this, the wedge, and the red line here is no longer the upper range. We'll now go with this purple line here. But I want to keep the red line up because we seem to still be getting reactions around this red line. You can see here, we hit it right here and we gapped right above it. And then here, as we hit off the bottom, off support, we stopped right here on the daily, and the very next day gapped right up to the top of that trend line and moved higher. And then again right here, we're just gapping over the trend line. So we keep, there's reactions happening around this range. So I want to keep it up, but we also have the upper range here where we're getting more reaction. So at this point, we'll consider this the upper resistance line, and we'll want to see a break above this in order to confirm a successful bullish breakout of this bullish falling wedge pattern. So this is a pattern that should resolve to the upside. The way you play this is there's a higher probability that it resolves bullish. So you'll want to be long this stock, this gold mining stock, and you want to take, you want to build a position or take your trade, however you want to play it, but you want to do it either when you're hitting support down here or on a successful breakout above the resistance line. Now on a breakout, you're going to want to make sure you're on it quickly, because usually on breakouts you'll get the initial thrust higher, which is usually pretty fast, and then a lot of the time that will die out and you'll get a back test of that breakout trend line. So if you end up chasing the breakout, a lot of the time you'll be underwater initially because you'll get that back test and it'll sell off. Doesn't mean that it's going to just completely sell off. It usually back test confirms and then moves higher. But positioning wise, it's best to be positioned close to risk, and the risk right now is right here on this resistance line. So if you take the trade long on a breakout and you're close to the resistance line, then if it starts to sell off back within, and they recapture resistance, you can stop out right there and look to enter at a different level. So that's Barrick. The trade idea is this KHC. So I actually made money on this thing going long today, which it doesn't, when you look at the hourly chart, you kind of wonder how do you make money going long on KHC today? Well, the way I did it is I had these trend lines up right here. Here's your trading zone that's been in place for, months basically. And you can see we traded in this zone for a while before breaking down, and then we came back up and tested it from the top side. 1, 2, 3 tests. Then we recovered it and held it again before breaking down. So this is a trading zone from 3150, and I've said this in my videos, all the way to 3350. That's your trading zone. We've been chopping around there a few days, and today I noticed we were gapping down and selling down into that, so I looked to go long. The reason why I didn't go short this is because we're trading into this trading zone, and I gapped down. When we gapped down, we were right in the middle of the trading zone, so that's really a no, kind of a no touch zone. That's your demilitarized zone. There's just nothing going on there. There's no position. You're not close to risk. So as we were selling off, we were coming into support. So I wanted to buy this and go long when we tagged that support line. And that's exactly what I did. And if you can see on the 1 minute chart, here's your 1 minute. And there's your tag of support line right there. And I got long right there. Saw this thing moving higher. I closed about 30% of my position right up here as we started to run a little higher, and then I had the rest of it, and then I noticed we started to lose steam and started to kind of chop out right here on this red candle right there. I closed the rest of my position, and that was it. That's really the trade. It was not a very big runner, but it had the potential to be a runner. What I was looking for is a bounce off of the support and to work our way back up to the resistance line up here. When we started to not do that and show kind of weakness, I closed the position with a profit. And so that's how that worked. I went long that and made a profit. Now, where's the trade coming up? Well, we've now broken down, and you could have gone short right here on the breakdown of this support, especially when you started to resolve and close below this and see the momentum starting to pick up. That's a really good short. I mean, I had already gone long on this. I just wasn't looking at it anymore. And then it's, started to resolve down. So now we look for the next support range, the next support zone. And here's the thing. On the daily, we're right in the middle of the next support range. So there's really no trade to be made, no new position to be entered. I mean, if you're short, you could potentially add to that. But there's no new position you'd want to take right in the middle of a range. What I'd want to do is probably look for this thing to bounce off the next support, which is going to be right down here around $30. And give or take, you can see this is what we held on the daily, $30 several days. And then here it was resistance. And then you can see right here when we gapped up, on the strong earnings day, we basically held that $30 and moved higher. So you could move, it's about $30. They might try to step in a little bit earlier. I mean, you could maybe move it up to roughly there, which would be 30.08, but it's right around there. So if we run down and tag that today, then you could look to get long right there. Set your stop below the gap. Now they might try to enter the gap just briefly to run some stops. Give it a little bit of room, but you have your stop, within this gap. So if they enter the gap, then they're probably going to fill the gap, which would mean that they're going to come all the way down here to $28. But if they just stop short of the gap or don't even get to the gap, and that would be pretty bullish if they get close to the gap and then the buyers step in. So I'll be looking to be a buyer right here, and for a move back up to this 31.50 would be my first target, and then second target's going to be up here at 33.50. So that's the trade idea. It's not, there's nothing actionable yet, but you can see we're getting close. We're continuing to sell off. So I'll be looking to be a buyer down here. And again, that's the nature, that's what I try to do on this channel. I try to throw out ideas and trade setups before the trade has happened. The difference between maybe this channel and someone like you'll see on like Jim Cramer or something, I mean, a lot of the time he's just saying he's telling you to buy all the same stocks that everybody else is buying, and the trend, the trade has already happened. He'll just ride the trade until it reverses, and then tell everybody that what the Fed's doing wrong or whatever. And that's just the nature of big money managers or big people with exposure on TV. Is they have to kind of go with the herd. They can't afford to go against the herd and be right in the future. If they have to be right now, and they can't get positioned a lot of the time for a future trade. So anyways, that's what I see in this KHC. Trade it however you'd like. That's I've explained how I'll be trading it. So anyways, I'll get the video out, and if anything changes in the major markets, we're having a little bit of a sell-off, but it's really just back and forth. It's just kind of chop city right now. So if anything major changes, then I'll put a video out on that. But until then, we're just going to continue to look at some of these other trades. Anyways, catch you on the next one. Bye.